Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock with news our wholesale rate markets are being roiled by Aussie inflation data. But first in the US, orders for durable goods declined 0.4% in September from August, following a downwardly revised rise in August. But analysts had expected a much larger 1.1% drop due to the ongoing supply chain disruptions. Meanwhile, the US merchandise trade deficit topped $100 billion in September, its largest ever. Exports rose 17% year on year, while imports rose 18%. And the Canadian Central Bank had a rate review overnight and left its policy rate unchanged at 0.25%. But at the same time, they ended their Kiwi program. No more money printing for them. However, they didn't go so far as to signal when they might start draining the built-up reservoir of pumped-up liquidity. They added about $350 billion of Canadian government bonds to their balance sheet over this Kiwi program in about 18 months, or about 20% of their annual GDP. In September, industrial profits at Chinese industrial enterprises rose 16.3% from the same month a year ago, growing much faster than their revenue gains of under 10%. They seem to have taken advantage of soaring material prices and persistent supply bottlenecks to raise margins. In Australia, their headline inflation rate dipped to 3% in September, down from 3.8% in June. This was an expected reversal, but the effect was a bit more than they anticipated. The more technical trimmed mean CPI actually rose 2.1% year on year in the third quarter, the most since the fourth quarter of 2015, after a 1.6% rise in the second quarter. This is the figure the RBA watches. These rises put the RBA's bond market targeting in a tough spot. Markets now think the RBA may have to raise its policy rates faster and earlier than they'd previously signalled. And bets along those lines will make it increasingly expensive for the central bank to defend its 0.1% three-year yield target. The US Treasury 10-year yield opens today down a very sharp 9 basis points to 1.53%. And the price of gold is having a minor rise today, up $3 to $1,795 an ounce. And oil prices are down by more than $2 to just under $82.50 a barrel in the US, while the international Brent price is now just over $83.50 a barrel. And the Kiwi dollar opens today firmer at 71.8 US cents. Against the Australian dollar, we're little changed at 95.5 Australian cents. Against the euro, we're a fraction firmer at 61.9 euro cents. That means our trade-weighted index starts today at just on 75.3 and still well over the 72 to 74 range of the past 11 months, and possibly now resetting this range. We welcome your feedback on these issues. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.